Congress just passed the most significant housing legislation in decades, and almost nobody's talking or explaining what it actually means for your wallet. If you own, rent, or invest in real estate in Florida, this changes everything. The 21st Century Road to Housing Act just cleared a massive procedural hurdle in the Senate with an 89-9 vote, and it's headed to President Trump's desk. This is a rare, genuinely bipartisan piece of legislation co-sponsored by Republican Tim Scott and Democrat Elizabeth Warren. So it's going to be probably the most consequential piece of legislation for housing in almost 30 years. So here's the thing. Most of the coverage is focused on the political side. Almost nobody is walking through what this bill actually does on the ground, especially here in Florida, where the housing demand story is already unlike anywhere else in the country. I'm Jim Shields. I've been investing in Florida real estate for almost 25 years. I've owned hundreds of properties here. I'm a Wall Street Journal best-selling author, and I've spent my career building communities specifically designed for families in the housing market that have been failing. And what I'm seeing right now is a window of opportunity that hasn't been seen in a long time. Here's what we're going to be covering today. First, what the Road to the Housing Act actually does and why it matters. Then, why Florida is positioned to benefit more than any other state. And after that, the one specific provision that is quietly reshaping build-to-rent sector right now. And finally, what does this mean for a renter, a buyer, or an investor looking for real opportunities in 2026? So let me give the plain English version of what this bill does, because the legislation language is dense. At its core, this 21st Century Road to Housing Act does three things. It cuts federal red tape that slows down construction, it modernizes decades-long housing programs, and it unlocks private capital to build more homes. Here's a number that should stop you in your tracks. According to HUD Secretary Turner, federal regulations account for roughly 25% of the cost of building a single-family home and 40% of the cost of a multifamily project. So 1/4 of what you pay for a home is essentially the cost of compliance with outdated federal rules. This bill attacks that directly. Specifically, the act streamlines environmental reviews for housing projects, creates a new system of pre-approved home design so builders can move through permitting dramatically faster, and modernizes the Home Investment Partnership Program, which is the federal government's largest affordable housing construction program for the first time in over 30 years. That is not a small thing. I mean, 30 years of bureaucratic buildup getting cleared out in a single piece of legislation. The bill also unlocks federal grant programs that local governments can fund new housing construction rather than just rehabilitation of existing buildings. And it creates an innovation fund that rewards communities showing measurable increases in housing supply. In other words, it incentivizes the right behavior at the local level. This is not the government trying to spend its way out of the housing crisis. There are no major new subsidies in this bill. It's a market-based approach that gets federal obstacles out of the way and lets builders build. That is exactly the type of reform that actually moves the needle, in my opinion. So every state will feel the impact of this legislation. But Florida, it's set up to capture the largest share of the upside, and here's why. The reasons come down to how Florida's housing infrastructure is already positioned compared to every other growth state in the country. Florida counties have spent years streamlining permitting process. In many of the markets across the state, builders are already moving from land purchase to rental income in 6 to 8 months. That's a timeline that takes 12 months or more in Texas and way longer in states like California and Tennessee. When the federal government removes regulatory drag from the top down, builders in Florida, they're going to be able to accelerate even further and faster. Then we also have the demand side of the equation. And now with Florida, they're not just adding residents, it's adding residents with real purchasing power. Remote workers are coming from New York, California, Illinois, and New Jersey, and they're continuing to relocate here, and they're bringing those higher incomes with them. According to new data tracked, 67% of new tenants in Q4 of last year, they came from just 5 high-cost states with average credit scores above 760 and average lease terms of 24 months. That combination of streamlined construction capacity and surging qualified demand means Florida, they're positioned to absorb new housing supply faster and more profitably than any other market in the country. When federal red tape comes down, Florida builders do not have to wait for the market to catch up because the market's already there. Now, here's the part of the legislation that almost every financial media outlet is getting wrong, and it's the part that matters most if you're investing or renting single-family homes. The 21st Century Road to Housing Act includes a ban on large institutional investors purchasing single-family homes, and the coverage of that provision has been almost entirely misleading. The ban applies to large institutional investors defined as entities owning 350 or more single-family homes. It does not apply to community-scale builders. It does not apply to individual investors. And critically, it includes a specific exemption for newly constructed build-to-rent communities, meaning purpose-built rental neighborhoods are still fully permitted under the law. What the legislation actually does is push speculative Wall Street scale buying out of the single-family market while creating a protected lane for builders who are constructing new homes specifically designed for long-term renters. This is not a threat to the build-to-rent model. What it is, it's a green light for the right kind of build-to-rent, the kind focused on creating quality housing for families rather than scooping up existing inventory and driving up prices for the normal buyers. All the families who need housing are not going away. America is short approximately 4.7 million homes, according to the National Association of Realtors, and that shortage does not close overnight, even with the most ambitious legislation. Let me break this down by where you are sitting right now. If you're a renter, this bill eventually means more options and more competition among landlords, which puts downward pressure on rents over time. But the key word is eventually, because the legislation at the federal level takes time to translate into homes on the ground now. So if you're trying to buy a home, this bill does not change mortgage rates and it does not change home prices overnight. The Harvard Joint Center for Housing Studies has reported that since 2019, home prices have risen more than twice as fast as wages, and that gap does not close in a single legislative move. What this bill does is begin to remove the structural barriers that have kept builders from producing enough supply to meet demand, which over time is the only real solution to affordability. If you're an investor, the window here is real and it's time sensitive. The provisions in this bill that streamline construction, reward housing production at the local level, and create clear exemptions for community-scale build-to-rent developments are all pointing in the same direction. Florida, with its permitting efficiency, population growth, and qualified renter base, is the clearest opportunity in the country right now. And this is where Southern Impression Homes fits directly into the picture. We build purpose-built single-family home rentals and duplex communities designed specifically for families the housing market have been failing on. We are not buying up existing inventory, and we're not operating at the institutional scale that this bill restricts for you individual investors. We're building new homes in markets where demand is real, and we're doing it in a way that serves both investors and the families who call these communities home. The Road to Housing Act does not solve the housing crisis by itself, and anyone who tells you it does, they're really oversimplifying. But it does remove meaningful friction from the building process. And in a market like Florida today, where the engine is already running, removing this friction means more homes built faster for the families who need it the most and eventually at better pricing. So here's the bottom line. The 21st Century Road to Housing Act is the most significant federal housing reform in decades. It cuts red tape that inflates construction costs, modernizes programs that have not been updated in 30 years, and it clears that protective lane for purpose-built rental properties and communities while restricting some of the large-time institutional investors that have been crowding families out of certain markets. Florida is the best-positioned state to capture the upside of everything this bill unlocks. The demand is already here, the construction infrastructure is already efficient, and the population growth is not slowing down. The legislation simply accelerates what's already in motion here. If you want to understand exactly how we are building for the times now at Southern Impression Homes, including the specific Florida markets we're focused in, the construction we use, and why duplexes, single-family homes, and build-to-rent in 2026 looks differently than any other time we've seen before, drop your biggest question in the comments below, and I'll answer the best ones in next week's video. And if this gave you a clearer picture of what is actually happening in the housing market right now, hit subscribe, because every week I'm going to be sharing more insights like this. We're going to see what units are going on the ground, what types of properties and what markets to focus on, what headlines to pay attention to, and what headlines to ignore. This is the real intelligence that matters for families and investors alike.